trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we've had a lot of things happen here in the last couple of days. We've had a rally in the Dow Jones from 38,000 to 40,000. That's 12,000 points. Today, you can see from yesterday, we had the news. As you can see here, we were selling off. And then, of course, the news announcement came out that they were not going to put any or very few levies, tariffs on China, and also that Trump had invited what's his name, Chairman Powell, to his birthday party on June 14th. So evidently they're good buddies again. Anyway, you can see the ABCD pattern up there. There's a 78% level. Now this is what's happening so far this morning. So let's just check this, because if this is really going to be bearish, you're not going to get any more than a 382 retracement off of that low, whatever it is. And this is what we're looking at right now. It's probably getting close. So there's the high that we made. There's the low coming in. Let's just see how we'll get there sometime this morning. We'll put the beeper on. Jeff Hughes will be our guest, but oh my goodness, we're only 50 points away. We'll hit that while I'm talking. So let's take a look now at the E-mini S&P. There's the E-mini S&P. There's where we were on the hourly. The same thing as the hourly, only what I did was I spread it out. It measured to 1495. The high was 1501 or something. No, 1499 was the high. Now we're backing down. I can see this one right now is already through the 382 retracement as we speak. Right, oh, it's really close. No, it's there. It's already through it. Yes, there it is right there. So it still looks, because if this can hold and goes higher, we can go a lot higher, folks. Anyway, this is what I'm paying attention to right now. On a little smaller time frame, if you went down to an 8-minute, you'd see a small ABCD pattern forming here. There it is on that leg right there. So that, if you want to trade in the direction of the opening, that's up in here. If you were to take this, just to draw the ABC, this is the first one we've had on the down move. So there's your AB. There's your CD leg. It's going to come right up to the old 61% retracement. Let's just check this and see how we're watching it. There's our AB leg. That doesn't draw it right. Hold on. I'm going to draw it with the drawing tool, folks, because that way I'll be 100% sure that that's the right number. And then you move that over here like this. And boy, we are dancing at it right now, right here at 34.39. Your stop would have to be above 39.59. With a market like this, when it can drop 100 points, a 20-point stop is not very much. Okay, so we got those out of the way. There are other markets that we were trading today that looked interesting. As you remember from yesterday's show, we were saying that we had a really strong probability that the gold had made some type. We followed these 382s for you yesterday. This was the one early this morning. This was the biggest rally that it had, folks. Look at this rally. We went from 30, we rallied 70 points. And what harmonic number is 36 times 2 is 72. It rallies 70 points right at the 382, breaks again, right at the 382, and look what it's just done now. If you like patterns and you're looking for a buying opportunity in gold, my goodness, it gave you one. Let's just move this up here. There's your drive 1, there's your drive 2, there's your drive 3, and we're having a nice little rally. This is going to be the one that tells us, because we've come down from 35.04 down to 327. That's $275 an ounce, and now we're going to find out whether this has staying power or not. But there's your AB, there's your 3 drive to a bottom pattern, there's your rally. So we can see another small ABCD right there also. But anyway, that's the gold market. Someone's asked me, has the gold topped? I can tell you it's made some type of a top. I can't tell you it's the big top. If it's going to be, sorry folks, I've got this allergy. If the market goes below 2,900, that's 600 points lower than the high, then I say, yes, that's the major top in gold for several years. But until that's happened, it's still bullish. And that's what I can say. All right, now let's take a look at another one that we were watching last night. This was while it was happening, folks. So this is where we were. There's where the market was opening here this morning. There was your 78% level. That was the ABCD. You can see the 3 drive to a top ABCD pattern right there. We'll just draw it in to remove all doubt to see what we were doing here. Hold on one second here. There's your ABCD leg right up there at your 78% level. Then it had the break, but look what's happened since the break, folks. If you go down to a smaller time frame, just like we just did in the S&P, there was your 382 right here. Look at this. This dropped $1,000 and then rallied up, and then is back another $1,000. So it's really heading towards lower prices is what we're watching here. In the crude oil. Now, let's take a little drink of water here for just a second, and we will get this next chart up that we want to see. Hold on one second. I'll bring it right up. Hold the Treasury bonds. This is the one I like the best, folks. I said that in the video as it was happening. The unfortunate part was it didn't quite get there. What I was looking for, something is wrong in the bond market, folks. There's no question in my mind. If you just look at a bond chart, and we're going to in just a second, but here's what I was looking at for this morning with the, look, they even gapped up bonds, believe it or not. That's well. All right, there's your ABCD leg right here. It was going to go up to 116 and change. 13, we only got to 115.31. We missed that by 4 ticks, and you can see it's coming down now. Looking at the bond, I don't care what you're looking at the weekly, that's bearish. You look at anything, this is historic, folks. This is an outlier event to see bonds go from 121 to 110. 111. A 10-point drop in bonds. That's just absolutely historic. That tells you something's wrong. And then on the rally back, you see the rally back, we haven't. This is the weekly now, okay? The high on the week, let's just draw the 382 here. From this high down to this low right here. Oh, my God. Boy, talk about oversleeping. Shut the front door and raise the rent. I didn't even see this. There was a 382 here at 21, and we only got to 31, and I was looking for the ABCD. Uh-oh. That's what happens when you oversleep, folks. Yep, see, I was looking for that. I didn't realize that was a 382 on the weekly. Hello, operator. This is a 3-week rally in a bear market. Boy, this is not good. Wow, boy, that's what happens when you... Well, that's my fault. I should have been ready for that one. Wow, and here we're trading a whole handle, over $1,100 in the good right now, and that's my fault, folks. Let's look at that on the daily. I would have missed that too, I'm pretty sure. Yeah, I did. There it is on the daily too. Shut the front door and raise the rent. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, hold on just 1 second. I was showing you the gold chart here because that was that ABC part. This is the third drive right here. But we've got the Dow Jones is now making a 382 retracement. I did the S&P. I don't know. I didn't do the trade, folks. Hold on. Let me get this corrected here so that I can see what I'm looking at. Otherwise, I've got too much done. Here's where we are right now here. Yeah, the S&P is right in that same zone. Here it is there it is in the Dow Jones. We're hitting the 382 right now. And to me, that, you had a big drop. It used to be a lot of money, but not anymore. It dropped 700 points. Oh, that's not true. Yeah, it did. 800 points. Shut the front door. 800 points, and now we rallied back to right there. There's a 382 right there. Just hit it. The S&P just did it a little while ago there at 39. That's the number. There was a number. You have to risk 20 points on that. I wouldn't risk more than 10. But anyway, there's just lots of volatility. Now let's look at some other things that are tradable that are a lot of fun. Okay, I just can't believe I missed that bonds. Boy, that's a big move. Look at that point. Oh my God. Wow. All right, here is one that I always like. You can see the 382s that we did here in the there's the first one. There was another one right here yesterday. And now we've had a really wild swinging day here in the natural gas, which is really great to trade. Margin is good, 2,900. Heck, it moves $1,000 like nothing. So you can see here early this morning, okay, you see had the market from yesterday, comes all the way down. Then it makes an A, B, C, D pattern right here early this morning. There's A, B equals C, D. And it comes probably really close to the exact 61% retracement. We'll just draw that in. There's your AB there. C doesn't draw it right because it's too sensitive, but give me a second here. There it is right there, and then you draw it up right here, and there it is. Your 618 comes in right about there, goes a little bit. Then it comes down and makes a higher bottom, and then what does it do? Believe it or not, does the same thing it did before. AB equals CD. And that's why it's so fun to trade, folks, because it has a lot of these. And this move right here from 96 to that level right here is $1,000. Margin's only 2,900. The stops are filled very, very close to the market. Very seldom do you get anything bad, but that's what we're watching here when we're watching natural gas. This is the kind of thing I like to trade on our live trading day on Friday. We'll be doing something like that. Okay, let's move on. And Someone asked me a question by email that if what these politicians were doing was illegal. Folks, this is a free speech of the United States of America. Anybody can say what they want, when they want, and why they want. They don't have to have any excuses unless it's something that hurts other people. All right, that takes care of that. Now let's move over here. Okay, I want to make sure I covered everything in the. Oh, I didn't do the Nasdaq. Oh, the Nasdaq went a little bit higher, as it always does. Let's get it going right here. Let's just see what it's doing too, because we have to check the numbers on the Nasdaq because it's a big one. And you can see it went above the 78% level of the high that we made. Right, this is the last time we had one of those deals. Remember on the 9th? This is when. Wow, boy, oh boy, look at that one. That's unbelievable. And anybody that bought that thing in here had a loss until today. You'll see this is all it did is made a 78% level from that level right here. Now I can see it's bouncing really good. Now we'll just get this up here in a smaller time frame, and you can see it's already above the 382. Let's just draw it right now. And hold on. These only work in strong trending markets, so that's it. So there's your see. It's already at the 50% level, whereas the other two were at the 382. So this is live. This is the kind of thing that I do. So let's just see what they're doing together. All right. This is where the fun lies. I study these things, folks. They work. They don't work all the time, but still, look, S&P still working. Let's get this Dow Jones down in here. Move it up like this. It's still hanging in there. So it's when they fail, folks. That's when you got to get out of Dodge. Now let's just talk about a failure for just a second here, because this is where it's not how much money you make, it's how much money you don't lose. All right, we'll get this out of the way. Come on, Larry, get this. All right, we're in the middle of the Palo Verde season, folks. My old buddies, the old trees are out there. Okay, that number was at 4039. The high was 4054. So that would have been, your risk here would have been 50 points. So that's what we're watching. So as long as these don't get above these numbers right here, this is a 382 retracement. But the Nasdaq is at the 50%. We already looked at that. And there it's right here. Hold on a second. You see, it's at the 50%. And that's because you're only looking at about 20 stocks. They used to be expensive, but they're not so much anymore. So that's what we're watching. A couple of stocks to look at today. We've been asked to look at IBM. And I haven't looked at this stock in a long time, and here it is. And we've had a big move down, and then we've had a nice rally back here since April 7th. Today's high went to the 61% retracement of the range. We're trading a little bit below that, up substantially on the day, but far lower than the opening. So that's just a retracement. If you're looking at this from a technical standpoint, it's in a bear market, and these are lower highs that you see here. Your last high right back here from this high back on the 28th of April. That one came in a little above the 786. So there are two numbers sitting right here, 246. The high today was 249. We're trading at 245 right now. So this has been one of the better ones, folks. Some of these other stocks don't look anywhere near that good. Now, I noticed that Mr. Musk is in the move here today, and we'll get up here. And I was informed by the critics here at TFNN that I'm actually not a very close friend of Elon Musk. I was joking about it, and I hope you folks understood that. Believe it or not, there were some people that didn't. Hold on. Here's Tesla. We'll get this up here, and you'll see it's had a big jump here today. Wow, it's had a big jump right on the open, as you can see here. Must have been news. Okay, this is what's happened. Yeah, there's where it was yesterday. It was trading at 230. Wow, got all the way up to 258. That's a big move here. But frankly, folks, that's still bearish. Look at this. We got lower highs here ever since the middle of March. This hasn't taken that. When it takes this out, it can close above that, then I'll say, yep, then it probably can go somewhere. And it could easily do it, because if you look at this, you have a potential AB equals CD pattern that'll take that out. It could easily do that. But that's going to be hard for this market to get above this level. Just face this, because, folks, no matter how you look at these stocks out there, and I've mentioned them all the time, Home Depot, Federal Express, UPS, United Healthcare, Delta Airlines, Target, Walmart, they've got problems. There's not as much business coming through their doors as before. That's the problem. All right. Now we got Jeff Hughes coming up here in just a few minutes, and let's just double check the old TFN clock on the wall, and I probably got about 2 minutes left. Oh, 40 seconds. Not too bad at all. I wanted to show you today in the S&P where we were, thanks to our good friend John Jameson. We were setting up here at this 400 level, exactly at 2 standard deviations, and way down here right now. Anyway, that's what we're watching. Stay tuned. We got Jeff Hughes of Alpha Insights coming up, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in a fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
back, folks. We have Jeff Huge of Alpha Insights. And Jeff, I have a question. Someone asked me if they've ever seen the political implications of the market here, where someone says something and the market goes up. And the only thing I could remember was the Bernanke years, the Greenspan years. He did it all the time. But do you have any feedback on that you might want to mention?
Well, sure, Larry. Hey, thanks for having me on the show today. It's great to be here. I will just reflect on my Greenspan years as well. It used to be that we'd try and gauge what Greenspan's attitude was based on how full his briefcase was. Yeah, remember the briefcase? They'd show him walking across the street, and he had a big, fat briefcase with paper sticking out. They thought, oh, this is going to be a big one, you know?
That's right. I forgot about that one. Go ahead. Tell us about your downside targets here for the S&P 500.
Well, I'm going to talk about the first chart in conjunction with the second chart. Recall that I showed you this chart the last time I was on your show, which was March 21st, about a month ago. Yes. And at that time, the S&P was 5,636 points. We were expecting a drop to 4,800. That was a 22% expected drop. And we ended up getting something just shy of that, 21.3%. We got to 4,835. Now, I want to flash forward to where we are today, which is the next chart. Our next downside target for the S&P 500 is 3,500. When I said 4,800, I got so much pushback from my subscribers. People said I was crazy. That was impossible. Okay. Now that I just published a 3,500 target for our wave A low, primary wave A low target, my clients are saying the exact same thing. I'm crazy. It's impossible. It is not impossible. Let me tell you, a retracement back to the primary wave 4 low, which was the 2022 low, the October 22 low, is exactly where this market is headed before the next major rebound. And we think it's going to happen as part of a third wave decline, a third of a third wave decline. We're looking at minor wave 3 of intermediate wave 3 down. It should be something close to a crash before it's underway. Now, I hate to use the word crash because it means different things to different people. It has to be 20% down in one day to match the 87 crash. It could take several months and be kind of a slow motion sort of crash. But I think we're going to see a 34% decline before we hit our primary wave A low, which I don't expect to occur until probably October of this year. And so I think it's going to be a very, very difficult rest of the year. At least until October, at which point I'd expect a fairly significant counter trend advance, probably carry us right back to around 4,800 eventually in 2026. But that's my outlook right now. And, if we forward to the next chart, Larry, I'll tell you the reason I feel that is highly probable. We're in the midst of what W.D. Gann described as the 18.6-year lunar declination cycle. That Gann cycle had periods of 4 years of falling prices historically. And you can see that in the legend on the right-hand side of this chart with a red line through it. That's the major panic crash period. It's 4 years of falling prices. Businesses stagnated. There's breadlines, soup kitchens, despair, unemployment. Not so much in this day and age, but back in 1932, 1933, 1931, and 1930, all 4 of those years actually fell into that 4-year period. The 87 crash fell into that period. The 2007, 8, 9 crash, the great financial crisis, all fell within this J period. And we're in the midst of it now. I said last year I thought the stock market would top in 2024. It took till February 19th of this year for the S&P and the Dow or the S&P and the Nasdaq to top, but the Dow topped in December, and the SOX, the semiconductor index, topped last July. So, I think we were more or less right on the average stock. It's just the major averages, which were dominated by the Mag 7, held up a little bit longer. But I think we're now in sync now, and I think that we're in the midst of a major downturn that could last for a number of years here before it's complete. Based on Gann's cycle, he does not expect it to terminate until 2027, and that lines up with our thinking.
Okay, yeah, I can see that. I did a lot of work on Gann years ago with Jim Twentyman. Okay, now this is a short-term counter trend advance, and boy, they sure have these when they open their mouth in the orange garden or Olive Garden. What's that? Rose Garden. Sorry, Olive Garden. I'm thinking of Italy. Sorry about that.
Yeah, what we're looking at here, Larry, is just exactly what's happened since April 7th. We got that low at 4,835 on April 7th. Happened to be my birthday, believe it or not. And since that time, we've seen a counter trend advance in 3 waves to the April 9th high. And since that point, we've just traded sideways in a range. That range looks like it could be a couple of things. It could be wave 1 down, followed by a flat corrective waveform, ABC, which would be wave 2. That may be ended today. That's in that kind of magenta pink color. Or what we had been sketching out is we were expecting an advance up to the 78.6% retracement at S&P 5563. That coincides now with the 50-day moving average, and it takes us back into that gap. And we don't have to actually go to the gap resistance line in order to fill the gap. I think just getting 50% of the way into the gap is considered filling the gap. And I think there's enough resistance there that would hold it at bay, and we get our minor wave 2 high before we get a third of a third wave decline. Now, if I'm wrong about that assumption, then we probably top today. But clearly there's a number of gaps below the market right now that need to be filled as well. So we could chop around here for a few more days before we see the action that I'm expecting. But when it happens, trust me, you won't be confused about what's happening. You'll know that it's happening when it's happening.
Yeah, I agree with that. Now, the next one is the retail speculators. I've never seen this chart before, the TQQQ, but
Q, triple leverage, triple Q ETF. I don't know if you're familiar with that one, but
no.
This is basically a retail product. It's put out by ProShares. It triple leverages the QQQ or Nasdaq 100, and so what we've seen over the last couple of weeks is record inflows, and these inflows actually began in mid-February, and we've seen this assets under management in this fund balloon from $7 billion to $20 billion over the last several months. And that $20 billion is retail speculators that are absolutely convinced that the market has to go higher. And we think that they're going to be sadly mistaken.
Jeff, stay with us. We got to pay a few bills, okay? We'll be right back, folks, with Jeff Hughes, your Alpha Insights.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're talking with Jeff Hughes of Alpha Insights, and we're taking a look at the gold miners versus the S&P. Boy, that certainly looks like an upside-down version of a bull market.
We've been advising clients to huddle in precious metals and precious metals miners for some time now, the last year and a half or so. And this is just an update since the last time I was on the show. These are the 1-month returns for the gold miners and gold, and they're all up double digits. Gold was up 13% over the last month. The miners were up 16 to 17%. Silver miners lagged a little bit. They were up only 5.5%. Silver was actually down a bit, but the S&P 500 was down 9% over the same period. So look at the alpha. I mean, you're up 25 percentage points in alpha by being long the gold miners and short the S&P. So, we think that's a place that's going to continue to attract capital. And the reason we think that is because we're approaching a Minsky moment, in my opinion.
Okay. I don't know what that means. Can you tell me what that means?
Yeah, show the next chart.
Oh, here it is, right here. We're approaching Minsky. Minsky.
So, it's all about the debt cycle, right? Financing. Hedge financing is, think corporate borrowers, right? They're the guys whose current cash flows from their operations or investments, if you will, can cover the interest and principal required to pay. That's the traditional sort of hedged financing. Speculative financing is more like what sovereigns are doing. They can generate enough cash flow to pay the interest, but they have to roll the debt in order to recover the principal because they don't have enough money to pay it back, and they never will. Ponzi borrowers are actually what the consumer has become now. They are borrowing based on the belief that we're going to see constant appreciation and value of the assets that they're using to collateralize their debt. And so, the problem that we've run into now is that, risk asset prices, real estate and stock prices are no longer appreciated. And there has been inordinate amount of leverage put on top of the equity market. Even we just got the new margin data today, and it's still $880 billion in margin debt for the month of March. That's only down 6% from the all-time record high, and it's up over 12% year over year. So we're super leveraged on the stock market, and real estate's even worse. If you look around the country, prices are actually declining in 50% of the real estate markets around the country right now. So it is going to get ugly. And I think we're right at the precipice of a major collapse in credit. And that will have a major impact on GDP growth and throw us into a recession, I think, this year.
Wow. Yeah. I mean, anybody looks at the bond market, got to shake their head and say there's something wrong here, because they're not telling us what's happening.
The bond market and the U.S. dollar, right? Take a look at this chart. Yeah. We have penetrated below both the 200-day and the 200-week moving averages, and now we've breached the critical kind of 5-year shelf of support. And, I've seen a lot of stuff on social media saying, oh, the dollar's bottoming because the Economist just put out a cover story, talking about a collapse in the dollar. Well, they're not always wrong. Sometimes they are. In fact, the last time they put a dollar story out, they called it the envy of the world. And that was right before the dollar ran 10% from 100 to 110. So my suspicion is they might be on track here, and that the next move to the downside could carry the dollar down to about 89% of its current index value.
Oh, brother. Oh, you're right on this one. We have 105 silver to gold ratios, Jeff.
Yeah.
I've been trading. That's just, for every ounce of gold you buy, you get 105 ounces of silver. I know they weigh more, but it's still pretty.
I think it's the cheapest asset in the world right now. And, I've been talking about it for some time. We've been long silver since April of last year. It's 5% of our what we call the perfect portfolio. We write about it in our newsletter every month. And we continue to believe that silver will be one of the biggest winners for investors this year and really for the next 10 years. And the next chart I want to show you is going to explain why.
Okay. Yeah, I see that. Yeah, I remember $50 silver twice, 2008 and 2011. Yeah.
When I worked at Smith Barney, I worked with a guy named Alan Shaw, who is one of the finest market technicians I think that Wall Street's ever produced. And one of his kind of major tenets to his work was the bigger the base, the higher in space. Well, we're looking at the price of silver on a quarterly closing basis right now. And this is a 40-year classic pattern base formation of the cup and handle variety. Now, we've already broke out from the downtrend. And once we clear that 38 level, look out. This thing could go and go and go. We used Arthur Scleroux's rule of 7 to calculate what potential price upside targets could be. And our very first objective is 64. That's a double from where we are today in silver. But if we start hitting some of these extensions, the 7/3, 7/2, 7x sort of moves, we could see silver run to $85, $126, and $248 per ounce. This could be the biggest winner in history, right? And so people are worried about whether or not the Tesla is going to invent a robot that can drive a car by itself. I mean, that's nonsense. That's not how you're going to make any money. If you want to make money, invest in silver now. I think you'll quintuple your money, or much, much better than that, over the next decade. This is the place to be, because if the dollar is actually flagging, and we think it is, then there will be a panic into precious metals. And silver's a follower. It's always late, but it moves in a hockey stick, sort of mantra. And I think when people pile into silver, they will pile in feet first.
Well, tell the folks about this wonderful newsletter you have, my friend.
Well, like I said, we've been writing about this stuff for quite some time.
You sure have.
The 44th issue. We'll publish issue number 45 on May 3rd. The newsletter is affectionately entitled Huge Insights, The Big Picture. We publish it on Substack. You can find it at hugeinsights.substack.com. We publish the newsletter in 2 sections. The first section's free. It's kind of this preamble that kind of gives you our view of what's going on and a good analogy of how we can kind of put it in layman's terms for you. And then we get down to the nitty gritty, our detailed analysis. And if you want to get that part, well, it's going to cost a little something. You can upgrade to paid for as little as $15 a month. And that'll give you access to our complete detailed analysis and what we've dubbed the perfect portfolio. Larry, the perfect portfolio was up 6% in the first quarter and outperformed the S&P 500 by over 1,000 basis points. So, if people want to know if there's any value in this newsletter, that's your answer right there.
There is, folks. I can tell you that 100%. You've had some great calls in here. Not only that, when you look at, you're only right about 35% of the time, but you're knocking it out of the park. Hey, Jeff, thanks for joining us, buddy. We'll have you on again soon, okay?
You're welcome, Larry. Take care.
Don't miss this, folks. Substack, hugeinsights.substack.com, Alpha, Twitter at alpha/insights, and then www.jwinvestment.com is the website. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we were talking about this S&P and Dow Jones. Now, if you did the S&P, that made just about 25 handles. And if you're only risking 10, you make twice as much. That's usually your target. I posted this while Jeff and I were talking. Was right down at the 61% retracement. And that was the same thing here. So this would have made well over 1,000 Dow points. Now you see we're going because, folks, this is not a weekly chart. This is just an intraday chart. And, that's the problem is that you put a trade on, you say, oh, this is going to be the big one. Well, it may be, but the only way you're going to figure that out is to put your stop and break even. And after making that after making that risk assessment, and you made twice as much as you were risking, that to me is silly to do that. That's why I posted that in there, to try to give you a point. This is an 8-minute chart, folks. It's not an 8-week chart. It's not an hourly chart. Look at, well, you know what the difference is. If you look at the hourly chart, you don't see anything. You see, that's the difference. That's why you've got to be able to do that. Yeah, maybe that's it. But if you wanted to see if that's going to be the case, you've got to put your stop up here, break even, which is at 54.38. And that, to me, after getting down to 53.85, are you kidding? No, it got down to 50.07. So we dropped 35 handles down from the high, and that's where we are right now. So that's why I would suggest you stay with the profit, or take the profit off. Whenever you risk, this is scalp, folks. When you're looking at an 8-minute chart, this is not a long-term chart. So that's what we're watching here. Now, on a longer-term basis, is we can easily do this for the rest of the day, and then you want to watch that, and that would just be a classic ABCD up here at the 54.65 against that high we made back here at 54.99. So, and that would be a probably, let's just draw that in so we can see let the folks see what that would be like. And we'll be see on the flip side tomorrow. Our guest will be Stan Harley. The Harley man will be in the house tomorrow. Friday is Norm Minsky. We'll see you tomorrow, folks. May God bless.